Hello, everyone, and thanks for watching this week's review of my weekly watch list. I realized I hadn't put it in a text file and taken a picture of it and posted it to Twitter, and I solely relied on my alerts in here. The problem is all of the alerts, as they trigger, they disappear. So what I actually had to do was go back and watch last week's video and write down my um, my watch list on a piece of paper. So going forward, I'm going to have to remember to do an actual text file and take a picture of it so I have it. It's just make it easier to do the reviews. Um, wasn't great results this week on my watch list, but you'll have that. We were kind of sort of like in limbo last week. If you look at SPY and QQQ, we had an inside candle here. It was kind of a hammer somewhat. Um, it was, yeah, we closed closer to the highs of the candle than the lows of the candle. So, um, it looked like it would probably possibly go up, but it's kind of, when you have an inside candle, we don't really know. So I kind of went half of my watch list last week was looking for breakouts to the low side and half to the upside. So I had Apple. I had Apple actually both directions. 128, which was right here. A break above 128, a break below 122.86. We did break above 128, but it didn't hold it. This would be considered a fail if you would have got in right at the break. It doesn't hurt to give it a few cents. I mean, the high was 128. We went to 128.32. You're not really giving up that much money if you let it go maybe 50 cents before you get in to see if it's going to hold. That's up to you how you play that. I don't believe I entered this trade, so no harm there. But that would be considered a failure. It didn't trigger to the downside, so no entry on that. Las Vegas Sands was the next one, and we had an inside week again, and I actually had it going to the downside. I didn't even have it to the upside. The upside would have been a failure because, well, let's see, maybe it would have been. We would have been looking at break below here, which was this candle, 55.29. Yeah, break below this candle. So that would have been our entry. Our target would have been here. Either way, we wouldn't have hit. If we would have went to the upside, which I didn't, I only had it to the downside. This would have been a target. This would have been a target. Yeah, I guess we probably could have hit a couple targets to the upside, but I didn't play it that way. Actually, I don't think I traded this one at all. But either way, that I would consider that a no trigger. I didn't have it on my watch list to the upside, and it didn't trigger to the downside. So another no trigger there. I had Boeing to the upside. You can see my alerts, or my levels are still on this chart. And these were my targets, and the reason for the targets was this is the weekly chart. Come over to the daily chart. You see a high here. This candle wasn't here yet, so forget that any of this exists. The next highest high was right here, and this would have been considered a target here also, but it was pretty close to this one, so I kind of just went with this for target too. We broke both of those, so Boeing definitely would have been a winner. Would have been, we had $11. Actually, we had more than that. We had a $16 move, so that would have been a real nice one. Even if you would have taken profits here, you still had a $5 move. It would have been a very nice trade. So there's a winner on Boeing. Bubba was another one. I had Bubba to the downside. I did enter this one, and I got stopped out. We broke below it here and came right back above it, and I stopped out of that one for a small loss. That would be considered a loser. DraftKings I had to the downside, and obviously that didn't happen. It ripped to the upside. So, and the reason I had it to the downside is if you look at, it had been weak for a couple of weeks. You look at the monthly chart. The monthly chart was a 2 down. Not much there to say that it looked like it was going to go to the upside. So I would have just sat out to the upside, which would have been a mistake, obviously, because it took off pretty good. McDonald's was the other one. I had McDonald's to the upside. Actually, I must have had it both directions, but I only have it on my watch list to the one side. But either way, I had it to the upside. It broke to the upside. The alert was for 234. It hit 235. It opened way down here. So what was the likely scenario is it came down to here, popped back up, it broke here, pulled back. So if you only hold these, this is based off a weekly chart. If you only hold it for 1 week, you really weren't out anything. Because it opened here, you wouldn't have gone in until it broke this. If you didn't sell up here and you came back and you sold yesterday at close because the week's over, and you typically only give these 1 week if it's a weekly chart, 1 month if it's a monthly chart, whatever. It closed at 233.89. It closed 13 cents lower than your target, than your trigger. So you really wouldn't have been out much other than theta burn. Which, if you were playing current weeks, then yeah, it would have been quite a bit. I usually don't play current weeks when I'm doing a weekly because I may be holding it overnight. But that was my watch list for this week. It triggered. This didn't trigger till late in the week. If it would have triggered earlier in the week, maybe it would have worked out because it looks like it's maybe headed that direction now. And there's nothing saying that you have to close this because it's Friday afternoon. If you have, maybe you bought June monthly calls, you could hold on to this. Keep your stop, maybe halfway this candle. There's different ways. I've talked about this before. You can put a stop like halfway between the previous candle. You can put a stop at, if you enter right here, put your stop just below here if you want a real tight stop. There's different ways to do it. And you see my chart looks a little bit different this week. I'm just playing around. My alerts or my watch list has been pretty good. But the problem I'm seeing is that I am sometimes getting in a little bit too early. I'm trying to time my entries a little bit better. The reason I don't usually play weeklies on a weekly chart is because I get in and it might pull back 25-30%. I'm trying to time my entries a little bit better. So this is actually a TTM squeeze. I know a lot of you are probably familiar with it. I'm not necessarily using it yet for my entries, but I'm trying to kind of tie it into the strat. I traded SPY yesterday, and on the 5 minute on SPY, we had a series of red dots, 2 or 3 red dots, and it had just, let's pull it up. I can pull it up and show you. Must have been, obviously it was before the market closed. It may have been right back here. Actually, I think it was before that. Yeah, I think it was back here. We had on, I forget what chart it was, we had a reversal. It may have been here on the 60. I don't remember what it was now. But anyway, at the same time that happened, we had a series of red dots, and we broke above this 21 EMA. And when that happened, yeah, it was right here because I got in right at the end of this inside candle here. We pulled back down, and we started coming back up. I think I might have got in right when we broke over this 21 EMA, which was basically a break over these series of inside candles. I think I got in right here because we were headed up, and we broke the 21 EMA. We had a series of red dots, which represents consolidation, which is obvious because of the inside bars. And then the green broke. I changed my colors on this. The default colors are dark blue, light blue, red, and yellow. I changed the colors on it because it makes more sense to me to have green bars than blue bars, but that's just my preference. So it broke above this, and then that's when it triggered, and you see we had this run up, pull back close to the 21, and kept going. I had set a pretty modest target on it. I think I paid $1.07, and I think my target was $1.25 or $1.23. No, I think I paid $1.02. I think my target was $1.23. So, I took a modest target. It hit. I got out. 20%, 22%, something like that. But just playing around with these different indicators, and I know Stratter's, some Stratter's anti-indicator, and that's fine. I'm just finding that with me having a full-time job and trying to multitask, it's easier for me to glance over and see something like this than it is to check all 6 charts. I have this up here. I'm trying to make it a little bit easier. Now, if I didn't have a full-time job, I may not worry about any of this because I can sit and watch the chart. So, do whatever works for you. I don't like too much clutter on my chart. This here is previous day high. This is a previous day low. I keep that up on my 60-minute chart. That's the only chart I have that on, so I keep the other charts clean from that. I have the 21 EMA on all my charts, only because the 21 seems to be a good one. It pops above it, it usually takes off, pops below it, it drops. It pulls back and bounces off of it or near it. So I try to keep the 21 EMA on there. And then, I just started messing around. I used to use the TTM squeeze before a little bit. I wasn't real big on it, but I used it before. Never really got too involved with it, but I decided to try it again. Actually, a video popped up on YouTube, popped up on my thing, and I watched it, and I'm like, well, let me see if I can, try to get a little bit more efficient at my entries, see if this helps. So, like I said, I'm really not using it for entries at this point, but I am paying attention to it when an alert triggers. Or not alert, but we get an entry here. Whether it's a rev strat or a 3-1 break or something, I pay attention to where these are, and I'm trying to correlate so I can try to get a little bit better entries. Always trying to improve. This here, I just put this on Friday. Somebody in the Discord room that I'm in posted this. It's shows all the indexes, if they're green or red for the day, and if they are how much they're up or down. I thought it was kind of interesting to watch that. Obviously you don't want to trade anything that's in the XLC sector. You don't want to go calls in the XLC sector if it's down 0.33% for the day, unless you're confident there's some kind of reversal coming. Maybe it was down 1% and it came back up and the 60 flipped and everything's looking good to the upside, but that's just something you want to pay attention to. I don't know what's in the XLC sector. I don't know off the top of my head, but let's just say there's a particular stock in there, and the XLC is down and continuing to go down. I probably don't want to be going long on that stock that's in that sector. So I just put put this on Friday. Haven't really used it. Haven't really implemented it. It's just there for now. Um, so we'll see. This is something else I put on here. This will show when everything aligns. I don't even remember what it's called. It's something else I found. But you know, when everything's green, and that's what happened yesterday on SPY. Everything was, I think it was SPY. Maybe it was Tesla. Everything was green on both of these, so I knew it was definitely a good entry. So just something else I'm trying to get a little bit better entries, a little bit more success rate. So I'll do another video later this weekend on the watch list. I have not even reviewed the watch list. I do have the scans with the list, but I haven't looked at any of them yet. Work on that and get another video out for this week's watch list before Monday night. Thanks for watching, and see you later. Bye.